Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, and we are at the 3rd of June, 2025, about 6:20 p.m. Central Time. Another stellar day in the stock market. No matter how they tried to break the market, didn't break. It kept moving on up to the east side. And what we looked at today is the end of the taco, all right? And what I mean by that, the phrase, Trump always chickens out. Well, he signed today, this afternoon, the tariffs on the steel and aluminum. Now, part of that would be how fast he rolls it back, right? I don't think he's going to. I think he's insulted by that term and people calling him out on it. He can't miss it. I don't know who coined it, but it's fascinating. So now we're going to see how everybody starts responding. The president has asked countries that they're negotiating with the U.S. for trade to give their best offers by tomorrow, so that I guess what the president can do is choose that, well, we have an understanding and those people won't be tariffed when July 9th rolls around. We'll consider them still in the negotiation process if it's there. There's no way they're going to get this done. Do you recall me saying that? I know I was a lone one on this, and I'm going, there's no way by July 9th you can deal with 170 countries. Sometimes a deal takes a year and a half. Where do you have the staff to do it? Where do you get the wherewithal in the other countries that want to do it? Everybody drags their feet. You should know that. And that's where you're at. A big problem is brewing in the rare earth materials. China is not releasing them. That's pretty evident. The call between President Trump and Xi has not taken place. And the president's going to invoke a War Times Act to speed up in America all the paperwork and how we can get to our own rare earth. That's all fine, but that's going to take years. And you don't have years. I mean, you're going to see auto plants, planes, whatever you build that uses magnets, some of those materials. We're running shy everywhere, and it's not only us, it's around the world. It's hard to believe, but China produces about 90% of it. So we will see what pressures it is. China, as I told you the other day, I said I think they have us over the barrel, not the other way around. And this is part of the problem that we need. So we will see what's done and the magic that President Trump can or can't do. I'm betting on him, so let's hope it works. In terms of looking at the metals, bit of a rally happening tonight. The dollar had a nice little rally, but everything's pretty steady. Tomorrow you're going to get the Bank of Canada. They're going to give you what their monetary policy is going to be. I mentioned that down at the bottom here. I expect them to do nothing, sit absolutely tight. We're going to get the Mortgage Bankers Association numbers. That comes out at 6 in the morning. Then at 7:15, you're going to get the all-important ADP number. Now, we saw today the JOLTS number. It was a strong number. So anyone that thinks that there aren't more jobs being offered, wrong. About 200,000 more than before. So the market took that as a sign that the economy's strong. S&P Global Group, the final May service sector PMI at 845. The ISM will release their May service sector index at 9 o'clock. We'll get the petroleum stocks at 9:30. In the afternoon at 1 o'clock, we're going to get the important beige book. So we'll get an idea of what the different regions of the federal banks are saying about business in their area. So it's a day full of a lot of information, and treat it as such. It's going to be exciting. So let's just go right to the charts. First off, when you look at a weekly close only chart, that's all that this is, and you see how the market's been coming up, you're not at the highs, but you're not far. You're 59.85. You're not too far away from those highs. When we come over and we look at the June S&P, as I've been saying, I said we've gone sideways. We're consolidating. Typically, consolidation like this typically leads to further rallies. We'll see if that is the case. You know, it's one thing to get up here, consolidate for a short period, and then you start breaking. This market's showing that every time it gives itself a break, the buyers are showing up. Now, at some point, you're going to have buyers loaded into these markets, and if they don't hold, then the whole reverse happens. But so far, that hasn't been coming in. You're far away from the high. You can see where this is, and that high is 62.36. So you're still in the marketplace. And all figures in the S&P, a pretty good far away distance, about 240 points or so. The market is holding all the key moving averages. They've grouped together. But what has happened, and I think I've been right on this, you had the 18 cross the 100. I said that often causes a rally. That began right through here, and you did get it. Now you've got the 18 that just got over the 200-day average. So everything's below the market. To capture everyone, you'd have to break all the way back here and close under that. And then you'd say, uh-oh, all the moving averages are above the market. Now you have a resistance point. Until that occurs, you don't play for it. You play that the support's going to be into the moving averages. At least that's how I would teach the charting pattern on that. When I look at where the market might go, I'm looking for resistance at 60.52. It's difficult to get up and stay over a Bollinger Band. I don't see anything just right here other than maybe the market gets excited if Presidents Xi and Trump can reach an agreement on something and keep those materials going and keep this pattern of detente, maybe that, detente, going between the U.S. and China. We'll see. But something's got to give soon. In the S&P 500, you can see the market's in overbought territory. Both numbers tonight are not over 80, as you can see. So it's still a matter of just being overbought, approaching the upper Bollinger Band. When we get to the NASDAQ, it's a very similar picture here over these key moving averages. Now what you've added to the support line in the market is the 18, the 200, the 100, and the Bollinger Band joining the parade with all them to give you more support. The next resistance point, the 22,005 level. So we'll see if the market can get there. The trend is still up in this market. The Dow is far away from what it can do there. It's overbought like the other markets. And unlike the other two indices, you have resistance points of moving averages above you, not below you. You've got the 100-day, the 200 with the Bollinger Band. So I look for pretty strong resistance from the 43,093 to the 43,061, the combination of the 200-day moving average and the Bollinger Band. Supports right here. You keep hitting it day in and day out, the 18-day average, and the market's thwarted. It can't seem to get through so far and stay over the green, the 100-day average of closes. But none of these are in bear territory. Let's understand where you're at. You're in friendly territory where the market's coming up. It's spending a lot of power up here. It's getting a lot of people buying this market. If the market starts down, it creates a problem. How many people are putting money in that they may not have? There is that fear of missing out. The FOMO trade is still working away in that right now. When you and I take a look here, well, now I can change. The market has gotten up high enough in the Russell tonight, as you can see, to take out that high. So the trend is up. Higher lows, higher highs. It's already approaching key resistance of the 100-day average and the upper Bollinger Band. It just picked itself up in the past probably 10 minutes as I was doing the charts. Then we take a look at the DAX. And as I've said each time, number one, you're trying to embed. You're not quite there, but you're working on it, and that would be bullish. It's when you convert a market from being overbought to doing this, and when that happens, often, not always, it propels the market to higher prices. Well, we've already had that. The market is sort of consolidating, I would say, that you haven't gone up and really made new highs and gone anywhere off of them the way you were doing back here. So this move that happened from April 7th is when this all happened, and Europe decided that they were going to really spend money on defense, and Germany's throwing a huge amount at it. That is what kicked those markets up. In the bond market, do you see the resistance? I pray to God you do. Look at that 18-day average, the line in the sand. So you've had the bear market rally there. I mentioned that yesterday. So far, this market's still in a bear market territory. It was just a rally there. But you don't have that working that way in the 5-year, the 10-year, or the 2-year notes. They're all over the 18-day average. So it's the long term, that 30-year bond, and I think it's going to hang there, and we'll probably get a good story as to how things are going to go when we watch some more Japanese auctions for their longer term coming up. And on January 12th, we have our 30-year auction. I'm not looking for it to go well. Lower low, higher high, really not doing a lot. The market has been, it was overbought about 3 days ago. It's working that off right now. Then we get to the dollar, which is finding support at the lower Bollinger Band. Should the market start failing here, I'm going to repeat again, you get under these lows back here and you've got a real problem. You could be looking at a very fast drop over to the 88 level. You're at 98. Yeah, I'm talking almost 8 to 10% drop could happen in that market. In the eurocurrency, we have a lower low, higher high. And by the way, on the dollar, I was watching the chief investment officer of Allianz talking about one of the provisions that is in the tax bill that was sent on to the Senate. And it gives the president authority that if he wants to discriminate, he considers people that have visited America from foreign countries, have investments here, and they're harming America, that he can raise the taxes on goods they have. And Allianz properly points out that why would people put their money in 30-year bonds at that point when at any point whoever's sitting in that office can tax you to heck? There's no point in investing your money. You won't be able to get it out. You'll get hurt on that. And your tax rate on any regular income can get hurt. So you're driving people out should the president get that power. I frankly don't know if that should be given to the president. I think the Senate really has to think this through as to how they want to work that out. And I do understand the intricacy of that. I was reading it and going, that was sort of snuck in and it's not getting a lot of play. You can see how the market is sitting here right now at the 80 level, trying to embed until the market breaks this pattern of higher lows, higher highs. If it embeds, probably going to the 136 level. In other words, the dollar should come under more pressure and most currencies going against it as the world realizes the United States is doing this. We're taking a pair of guns, we're shooting ourselves in both feet, hurting all our allies with what we're doing, with the idea that over, I'm going to say, a 4 to 10 year period, companies will come back, reestablish, and America will over time do better. In the meantime, this particular president is willing to eat the harm that it does. And he's betting that it's not going to be the time frame I'm talking, and I get that, and he's smarter than I am by a lot, I'm sure of that, but I don't think he's right. All right, not right in the tariffs, not right in the whole thing. And I'm just questioning if we're not hurting ourselves. So far, we're not hurting ourselves in labor. Okay, so you can't argue that. So far, we're not hurting ourselves in inflation. You just had the reports on that. So I like looking in a mirror and arguing with myself. And, you know, it's an interesting exercise to do. Lower low, higher high. You can see how the market coming up to the upper Bollinger Band. Look for resistance in the Brent right up here. I realize everybody says, well, they didn't throw enough oil at the market. The 411,000 barrels we're in. It's still more oil. And the question is, what happens with it right through there? In the crude, we went up to the upper Bollinger Band. So the people that went in on Saturday, for Saturday, saying, they're going to increase oil and I want to be short, they have gotten their heads handed to them. Over and over, you hear me say to you, don't go through major reports. You can't jump fast enough to get out of harm's way. That's what I've learned over the years, and I stick with that. I have been hurt. I'm the original Swiss cheese guy. If you've done it wrong in trading, I am certain I have the honor of having done it wrong. In rebarb gasoline, I look at the market. Here's your resistance point. Again, the market rallied for Memorial Day. Now this is different. So now the next event is what? Father's Day is an event, you know, that's one. People will travel. It's July 4th that the next big event is, though. And if the market can get over here, we can get another attempt. But do I think we're going back up to these highs? I do not. I think that your best shot is you might get up there. But right now, who's in control? The bears. You have lower highs, you have lower lows at this point in time. The bears are still in control in the market. So that's pretty much where I'm at on these. Remember, if you want to get our information, it's so darn simple. You go to our website under free offers. If you want to get my research, you go to our website, iraepstein.com, under the word research, the trading courses, iraepstein.com courses. So it's all there. We have a link up here. It'll take you right into how you sign up for your free offers and anything else you want to do from there. I'm Ira. I'll catch up with you in the morning subscriber video. Hope you watch the other videos tonight. Have a great evening.